Hey guys, welcome to today's video. Today we had a fantastic budget, and although the news was all like looking good, the market had a very big surprise for everyone. And if you have been very active today, you would have seen the kind of volatility which you have not seen in last 6 months. There was a gap up opening in the Nifty. It sustained for some time, and then there was a proper breakout happening around 12 o'clock and reached a peak of 17,968 and not 968, 975. From there, it started to take a big reversal, quite massive, and then it made somewhere around 600 points of fall. This was continuous fall, and then at last there was one large green candle and completely taken everyone by surprise. But it was not so difficult if you have drawn these levels to your charts, because we know that there is a resistance zone and there is a buy zone. So when there was a gap, it tried to breach and then it successfully went above it. But then that was only a trap. And then after this trap was set, there was a continuous fall. And after it breached, it took a support at this level and then it bounced back. So that's the importance of drawing the power zones to find accurate levels of support and resistance. So it was no big surprise for people who have drawn this, but then quite surprising for large part of the retailers. They were like caught by surprise. Keeping this, action that happened today, what looks like a possible scenario now is that the market had some good momentum. It went up and then it failed to take the market new highs. Rather, it failed and then came down and took a support here, which means the downside momentum is far more superior now. It is confirming that the market has lost all its interest in reaching newer highs. It's probably going to get into a great levels of consolidation and then fall, right? Probably this will consolidate here for some 1 or 2 sessions, and then that's going to fall. And as it falls, you can expect near term 17,750 levels. You can expect that anytime sooner, probably within a week's time you can expect, or worst case that it could happen by the second week, or by this expiry. You should this month end expiry, which is on 23rd, we can expect a good breakout on the downside. For tomorrow, what we can do is, these are the T7 levels on both the sides. 18,135 on the higher side and 17,000. You can comfortably write this T7 levels and keep T5 as stop loss, because the volatility has already kicked in. You will see quick actions happening. There will be a lot of volatility, right? Suddenly the market will jump up by 100 points, coming down by 100 points, even in Nifty I am talking about. So as soon as it reaches T5 on either side, you can square off. T7 can be the writings that you can initiate comfortably and collect the premium for the rest of the day. And that is for option writers. Now, if you are an option buyer, what you can do is wait for the reversal points, which is clearly T3 on the higher side. Whenever the market reaches, if it gives a gap up and then goes a T3 levels, surely you can initiate a PE position, keep T4 as stop loss, and then keep trailing down towards the pivot. Okay, as and when it clears to each level on the downside, keep trailing it and then keep pivot as a target, right? That's the game plan for buyers. Similarly, on the downside, if it is coming to T3, you can take a CE position and then keep trailing one level up towards the pivot. You can keep trailing it, and T4 will be the stop loss. So it's an option writer, T7 writings with T5 on either side as stop loss. As option buyer, a contra position at T3 levels on both the sides and keeping one level up and down as stop loss, and trailing it towards the pivot. That's the game plan for Nifty, right? Now let's explore Bank Nifty. Bank Nifty had again, the same set of actions, just made a big eye, and then it continued to fall so massively. Like you can see here also we had an up zone. It cleared, and then it just made that big long stride upwards. But the next candle it brought down, and then subsequently it brought down, and then continuous fall, right? So in fact, it breached the lower side of it, and last candle was green, and then it gave a close here. Now, technically, if you see what is how many points it has moved, 142 points. But really, is 142 points is all that has moved? Absolutely not. That's why numbers are very deceiving. Numbers will not be revealing the actual things that happened. What reveals is the actual candles, right? So you see the candles, if you measure this from the top to bottom, we had about 2500 points. I can even, draw and show you. It made almost about 2500 points from this low to this high, right? That's exactly 2500 points. But then what the market says, from yesterday's close, today's close is only about 140 points or 150 points. Does it really reflect? Absolutely not. So, whenever you are doing an historical analysis, always go by the candles, measure the length of it, and then see what happens. Then you will be able to gain more insights about things, right? Now, what you can expect, the T7 levels on either side, like T7 on the higher side is 41,392, which is almost like 41,400, and downside is 39,500 or 600. So this is the levels, but I don't advise you to write T7 here. I would want you to write 42k. Just go ahead and then write 42k as an exception, because the volatility is so massive and you will have that effect on the following day as well. So you write 42k on the higher side. On the downside, you can comfortably write 39,500. These are the two extremes that you should write. And as soon as it reaches T7 on either side, you can here on the higher side is T7 should be the stop loss, like that is 41,400. And on the downside, I would suggest T4 itself, right? Or even, T5. 39,900 can be the stop loss. So as a writer, go ahead and write 42,000 CE and 39,500 PE. Keep the stop loss at 39,900 on the downside, and T7, that is 41,400 as stop loss on the higher side. So that should be the game plan for writers. If you're a buyer, wait for the first 1 hour, because not even 1 hour, maybe at least 30 minutes you should not trade, because the premium jumps and the oscillations are so crazy that you will end up buying at a wrong price. So wait patiently and initiate the positions at right juncture. Play by the levels. As soon as you see that the market is taking a trend in Bank Nifty, as it clears T2, you can go with the trend, right? If it is clearing T2, then you enter into a CE position, keep T3 as target and T1 as stop loss. And as it clears T3, then go for T4, because the momentum is so much, like you can see the candles are like the length of these candles. It's all like indicating strong momentum, right? Whenever there is a momentum, that momentum, the possibility of the momentum to continue on the next day is also there, which is why for Bank Nifty alone, I am saying that don't go into contra position, rather initiate a position that is in the line of the trend, right? And then keep trailing it. So if you are entering into T2 CE position, then T3, T4, T5 will be the targets. Keep one level down as stop loss. Do not get into contra positions tomorrow alone. Okay, so that should be the game plan for Bank Nifty and Nifty. Hope you had a fantastic, profitable day today, and looking forward to meet you all in the live stream as well. See you all in another video. Thanks.